You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Marin Katusa, author of the New York Times bestseller The Colder War and CEO of Katusa Research. Welcome to the show, Marin.
Oh, it's a pleasure.
One of the headlines in your webpage is all about the Chinese stock market. Well, just how serious is the decline? How big is it in China, and how does it compare to what could happen in North America?
Well, look, when the butterflies or when the dragon's wings flap in China, there's no doubt that it affects things here. The reality here is that the storyline of China, if you believe that, you're investing in commodities because of the growth of China, I believe that story is changed. Is it broken? Perhaps, but things have definitely changed. When you look at half of the world's coal, copper, iron ore, it's all being consumed in China. And like I said last year, and I wrote about it, going, look, if you expect China's growth to be 8% for their GDP, you're going to be, your faith is going to be tested. You're probably somewhere between 3 and 4%, the real number. You see why they're devaluing their currency. You see the currency wars are continuing. So with the strong U.S. dollar, which I expect, and I've been kind of the black sheep of the resource sector saying for a few years, U.S. dollar is a place to be. And, when people, especially friends from my old firm, would say that, cash is trash, well, call me a garbage man then, because I'll pick it up all day long. And the reality here is that the U.S. dollar is going to stay strong for the rest of this year, and that's bad news for commodities. And, unfortunately, that also means gold, and I don't see oil changing in the next few months either.
Goldman Sachs was saying gold could hit $20. Do you think it'll go that low?
Well, Goldman Sachs said that the oil would hit down to the clearing price could go down to the 20s. And what they were talking about is the excess capacity. So, the high expensive offshores, the higher expensive shale oil that's hedged. And what Goldman Sachs was saying that lower for longer, and meaning that, when Iran comes back with over 2 million barrels a day production that they can export into the international markets, could oil get down to the 20s? They said possibly, but their base case is in the high 30s actually. So they were saying that the clearing price is in the 20s.
Now, what's going to happen to Alberta in the long term right now with such low predictions for oil?
Well, the one gift horse is the Canadian dollar. At a 75 cents ratio there, you're looking at much higher export price for the Canadian consumer, so they got to keep their costs lower. And I think they're going to do a good job of it. Innovation through necessity. Their drilling times are going to shrink. Their methods of fracking, and then the refracts. Things that they're now. There's some new wells happening in the U.S. where the refracts are more productive than the original frac. So you're going to see the same type of results in the Canadian patch. The Montney is a great place to be. So I think they're going to survive, but just like in any business, the high cost producers will die, and you want to focus on the lowest cost quartile producers.
Getting back to the Chinese stock exchange, the government says they're no longer going to try to bail it out by buying billions of dollars worth of shares. Instead, they're going to hunt down the culprits who have caused the crash in the market. Well, does that mean families are going to be getting bills for the 15-cent bullet used to blow the head off some relative?
Expect the unexpected in China, but remember, their stock market works very differently. And I was, one of my first report on the China bubble went viral over the internet because I was very early saying, hey, this is what I think is going to happen, and it happened. And part 2 of my report was talking about, the review what I said and what happened. But, little rules like a stock can't go down more than 10% in one day, and then they halt trading. They also restrict your ability to sell the stock. So it's not like it's a truly open market. So the shorters are what they're going to go after, the manipulators as they would call them, which in a free market, for every buyer there's a seller. But in China, they're going to change those rules. So be very careful. And, we spent a lot of time going through the research on that and saying, look, it's not really like the markets you're used to in North America. So if you're going in with that type of mindset, expect the dragon to take care of you're going to lose your shirt there.
With the price of oil dropping so low, are alternative forms of energy like solar and wind still viable?
Look, last October, so on October 1st, 2014, I published an article talking about what I think is going to happen. And I said oil is going to go lower for longer, so what you want to be exposed to and what I love, and I became a big shareholder of personally in my funds. I think we're like the third largest shareholder of Ross Beatty's company called Altera Power. The reason why I like it is billions of dollars has gone into the company during the boom. The stock experienced its bust, and now it's in an area that I call the echo, where now the realities are coming in. So all of the expectation and growth has come out of the market, and now it's about the value investor. They have 30-year contracts on their PPAs. So you're basically protected in a deflation, and you're protected in an inflation, and now it's got cash flow. So if you look at what the cost was to produce electricity from a windmill 10 years ago versus today, it's been cut in half. So you look at a company like Altera, it's actually economic without government subsidies. Now, it doesn't work in all regions. For example, run-of-river, you got to have the right type of geographic location. You got to have the right type of nature sitting in there. You got to have the right proximity to infrastructure, like your high power lines. So those are big costs. But geothermal is very specific to the geological potential. The windmills, you have to be in a high frequency area for power, or else you're going to be, sitting like the Grouse Mountain windmill, which doesn't rotate. And then same as solar. Solar prices have been chopped in half, where right now deals are being done on long-term contracts for less than 8 cents per kilowatt hour. That would be unheard of even 5 years ago. So yes, the green revolution is coming in, and when the markets have sold off, oil's down over 50% since October, and my public announcement on Altera, we're up 50% on it. So you got to think contrarian. You got to look in a different way in this market, because the theme of investing in these resources has changed.
We'll have more with Marin Katusa right after the break.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. In Oliver, October 2nd. In Kelowna, October 3rd. Buy online and save at ontourtickets.com. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Marin Katusa. Marin, what is the future of uranium? If alternative energy and low oil prices continue, will people still need to use a lot of uranium?
Without a doubt, because historically uranium is a base load power, and the rest of the world wants what we have and what we take for granted. And a lot of people don't realize that 1 in every 5 homes in America is powered by nuclear energy. That's 20% of their base load power. So why uranium to me is more fascinating than any other commodity is it is the most hated commodity on the planet. Even the Simpsons make fun of it. Where Homer Simpson works at a nuclear power plant. He doesn't work at a coal mine. He doesn't work at a underground, gold mine. He works at a nuclear power plant and handles uranium. So it's absolutely, in this market, the most hated commodity. It has experienced a bear market like no other. It's had a bust like no other. But the reality is, it is one of the few commodities that demand is growing for it. So you look at what's going on in China. Even Saudi Arabia is going to be building 16 nuclear reactors. And no commodity is so monopolized such as uranium. You look at over half of the enrichment capacity of uranium is controlled by the Russians. Half of the global resource of uranium is controlled by the Russians. So that's going to set itself up for an incredible bull market, a great, fantastic boom market for uranium. And the reality is there's no mine harder to put into production, to get the permits for, than a uranium mine. Okay, you can build a copper mine in the valley, you can build an underground gold mine, even a coal mine, but go try to permit a uranium mine, and there are so few. There's only 4 operating mills in the U.S., in all of the U.S. So think about in the early 60s, America was producing over 40 million pounds of uranium a year, and last year it produced 4 million pounds of uranium, okay? So that's a huge decrease because it is so hard to permit a mine. And yet the Americans import over 92% of what they consume. And it's been like that after Fukushima, it's been like that after Chernobyl, it's been like that after 3 Mile Island accident, and it ain't going to change because it's reliable base power. And that's what the emerging markets are going to do, exactly what we've done here in the West and Europe. You look at France is over 50%. Actually, today France just announced that they're going to delay the shutting down of one of their nuclear reactors because it's just too cheap of a power source. So nuclear is here to stay, and uranium is a fantastic place to look to speculate if you're a contrarian, but make sure you have a 3 to 5 year time frame because, remember, the market can test your patience much more than you can yourself.
What's Canada's role in uranium, or do we have one?
Oh, we have the best uranium on the planet in the Athabasca Basin. It's the highest grade uranium in the world. We are the Babe Ruth, so call it, of uranium globally. So, we have the best uranium in the world. It's very deep. It's very challenging to come out because it's so high grade. So you need robots to mine it if you're looking at Cigar Lake or even McArthur River. But we are the major exporter to the Americans, and the Americans depend on our uranium big time. If something happened in the Athabasca Basin, which is in Saskatchewan, northern Saskatchewan, you would see, if something just happened to, say, Cigar Lake or McArthur River, the spot price of uranium would move up 10-15%. We are the Saudi Arabia of uranium. So Canada's a major player in uranium, and we will continue to be a major player.
BC has a moratorium on uranium production. Is that a poor angle to take?
Well, you see, the reality